Hello, good morning, ladies and gentlemen. Welcome to another promising session on my morning life. And first of all, I would like to say I'm very, very sorry for coming in late this morning as I was caught up with situations that were beyond my control, and I needed to sort them out, or else. So I had to sort them out before I could come on live. So I'm so sorry. And in fact, we are going to be having an interesting morning today as I'm yet to look at the chart this morning. So we are going to be looking at the chart together, and you would have observed on my public platform that I'm yet to do an update this morning. So we are going to be looking at the chart together this morning, which will make it more interesting um, since I'm yet to do anything this morning. So once again, I'm sorry. And on that note, let's dive in right into the business for today. And in the last 24 hours, actually, we saw how the market has been quite a little bit sluggish. And I told us all yesterday that the tendency of low liquidity in the market is very, very evident. Hence, we want to be very, very careful not to get caught up in any situation that will make us make compulsive trade. Hence, we need our positions, our structures to mature before we want to be joining any position. And this was more of the public holiday that was observed in the US yesterday, which obviously would reflect on the chart as choppy situations which we actually saw. But it appears the market is beginning to stabilize this morning, and we have been seeing quite a lot of sporadic movement in the last couple of hours in the market. So we are going to be looking at that and how we intend to position ourselves ahead of both the London and the New York session today. And you know how we do it. The first thing we want to be doing here is to keep tabs with the fundamentals by ensuring that we check if we do have any high impact event that majority in the market will be looking forward to for today. So looking at the economic calendar here this morning and filtering out the other impact event. So I'm going to be focusing on the high impact event. And obviously, as you can see here, we do not have any high impact event to look forward to today. So we are going to be relying basically on our technical skills to identify potential trading opportunities across the financial instruments that we have been monitoring this week. And I also made mention yesterday that we also had a positive news during the course of the weekend as regards the U.S. debt ceiling negotiation, which Joe Biden informed the public that there is a positive development as an agreement has been reached, though there are still other proceedings that needed to be taken behind the scenes to finalize all this. So the market too, we want to see how the market will be reacting to this development too as well. We are going to be taking that into consideration while we look at the chart from a technical standpoint. So with that being said here, let's dive right into the business for today. I can see Miraculous Meditation. Good morning to you. It's been a while, Miraculous. How are you doing this morning? Trust you are doing well. It's been a while since I saw you. I hope you are doing very, very fine. All right. So let's get this started right now, and we shall be diving right into the chart. And the first thing we are going to be looking at this morning, as usual, is going to be our US oil spot. So on the US oil spot, we had a sell position triggered yesterday actually, and we can see price action has been moving in that direction in the last 24 hours, though we had a choppy situation where the market started the week on a bearish note. So let's see how the week started and what informed our decision to sell the US oil spot, at least for the first half of this week. So this was what we saw at the beginning of the week. We saw how price action was trapped within a range between the $73.55 level and the $73.05 area to give us a range to work with for this week. And one of the things we normally look out for whenever we have this kind of flat channel is that we want to see price action give us a signal for trading opportunities, which of course will either come in the form of a breakout of the resistance line for buying opportunity or the breakdown of the support line for selling opportunity. And as you can see what happened here yesterday, we saw the breakdown of that structure which initialized our first sell position for the week. And even if you had missed out on that opportunity, remember I made mention here that even if you had missed out on any opportunity at the breakdown of the structure, there's still a likelihood that price action will at one point in time come back to retest the support line that was broken, and this is exactly what happened here. So if you had your sell limit other place at that point, you would have had your sell position triggered. And remember, we also had a structure at the hold on a second, $72.30 area, which will also welcome more opportunities if price action broke down that level. So at this point in time, for those who are taking advantage of this move, you will currently be running with at least 110 pips on the first position, while the second position will be running with about 50 pips in profit at this point. So for those who are taking advantage of this opportunity, kudos to you for being on standby to have caught this move. And you know how we do it when price action moves significantly well in our favor. The next thing we want to be doing is to move our stop losses to secure the current position. And from the current situation we have right here, the most appropriate area I think that we can actually move our stop losses to is that area around the second entry, which lies around the $72.30 level. So we want to be moving our stop loss into the structure here while we wait out and see how price action will be reacting to this level going forward. So now that we've ensured our position has been secured by moving our stop losses around that area, so what is going to be our next line of action? How do we intend to take advantage of any trading opportunity today? So the question we are going to be asking right now is that, are we going to be having a situation where price will continue to the downside, or is there a likelihood that a bullish momentum could actually come in at any point in time? And I would like to call our attention to one of the observations we made on the 4 hours time frame. That was yesterday, and I told you that we also have a significant structure along the bullish trend line where, depending on how price action reacts with that level, will determine if we are going to be adding more sell position or get ready for another wave of bullish momentum to the upside. So if you recall vividly, we had this bullish trend line, which after connecting the series of higher lows, we had this bullish trend line figured out here. And with the look of things right now, in the last couple of hours, we have seen how price action has been oscillating just exactly around that trend line. And this is one of the reasons why it is very important that we move our stop losses to secure the sell position while we wait out and see how price action will be reacting to this level. And to make things a little bit more easy for us to be able to feel comfortable in our position or get ready for another bearish momentum here, it is very important that we alight and give a key level around that trend line, which we are going to be using as a yardstick to guide our trading activity for today. So if we bring out our line chart at this juncture and then connect these points together, you will see how this level had been a major determinant of price action in the past. So I want to be looking at the $71.80 level, and we should mark that out obviously, so we can always be able to use this as a yardstick to guide our trading activity for today. So we have the $71.80 level. Let's label that area so that we can have a visual representation of what we are talking about here. So I would like this to be on all time frames. So bring back our candle chart right now, so you can see how that level had been a major determinant of price action in the last couple of weeks in this market. In fact, if I go to as far back as let's see, let's see, as far back as the second week of this month, you will see how that area was initially serving as a strong selling niche at one point in time, as you can see here. Then we had a breakout of this level on the 17th of May. It was serving as a buy pressure around this area. We saw a breakdown. We saw break back up again around this area. And during the last trading day of last week, we saw how this area also was serving as a strong buy niche. And right now we are at a critical point, you would agree with me. As you can see, price action is currently oscillating around that area, and in fact we have a beautiful confluence here. We are the $71.80 level, and the bullish trend line here shares a confluence around that structure. So whatever happens around this area is likely going to dictate the pace at which price action will be moving for the later part of this week. So this is where our center of focus is going to be along for today. So to get things a little bit more clearer, we want to scale down into a much more lower time frame to look out for structures that we are going to be using to guide our trading activity for today. So scaling back down into the 1 hour time frame. So here we are on the 1 hour time frame, and this is the $71.80 area which we identified earlier. So for us to sell at this particular juncture in the market, we would want to see price action break down, retest the structure. Actually, I want to see a retest of structure, so I will scale down into my lower time frame to look out for something like a retest of structure or continued selling pressure where buyers find it difficult to climb back above this bullish trend line. So if that is going to be the case, then we want to be in for another sell momentum to the downside. And one thing about this kind of structure is that there is a high chance that a false breakdown could happen from this area. So we need to be very, very careful at this point in time. But trust me, I will be with you in the comment section on both my TradingView and Telegram platform to give you updates as at when due. Now, if we scale down into the 15 minutes time frame to see things more clearly around this area, this candle here that is currently running is running, it's about 12 minutes old, and so it still has about 12 minutes to go. Sorry, about 3 minutes old rather, and it still has about 12 minutes to go here. So let's remain patient and see how this is going to play out around this area. So if we do have a close below structure, then we want to wait for price action to retest for us to join the decline to the downside. So I hope that we'll be on standby to catch this opportunity if eventually price action comes back to retest the structure. So that is how we are going to be taking advantage of a sell momentum from this area today. So let's remain patient. Don't let us jump right into this move right now. We want to see price action come back, retest. We want to see signs of selling pressures, buyers finding it difficult to break back above the trend line before we want to be joining any bearish move from this point. And make sure that your previous sell position is locked at this point, is well secured by moving your stop loss accordingly. Now, in as much as we are looking out for selling opportunities at this point, it is very important that we also take into consideration the fact that buyers could actually come in from this current area. And don't forget that we are on a very strong trend line which has been supporting a bullish momentum since the beginning of this month. And I showed you there on the 4 hours time frame where we saw how that trend line has been supporting that bullish momentum here. And for the fact that price action is trading around that bullish trend line, we need to also consider the fact that buyers could still come in. And if buyers are going to be coming in from this joint, how do we intend to take advantage of a bullish momentum here? And if you had been following me for quite a while, you would know how we want to do it here. So what we want to see around this area that will give us the confidence or the intention of changing our bias from bearish to bullish is to start seeing buy pressure resume around that area. So if this candle closes in such a way that it comes in the form of a hammer candle, which from a technical standpoint is a sign that buying pressure is present around that area, then definitely we want to be anticipating a buy move. So to give a visual representation of what I'm talking about here, I would rather see price action continue to find buy pressure above the structure or a double bottom structure around that area. We identify the neckline of the double bottom structure and we get ready to buy at that point. So it is very important that we remain patient. Let's see how this candle is going to close around the $71.80 area to give us an idea of what our next line of action will be. And trust me, I will be with you on both my TradingView and Telegram platform to give you updates as at when due. If you do have any questions whatsoever, feel free to let me know in the comment section, and trust me, I will be willing to be of help in that regard. So I will be moving on to the next option. So if you do have questions, I will be checking the comment section to see. And the next one we are going to be looking at this morning is the GBP USD, and it's quite interesting that we have a very choppy situation in this market since the beginning of the week. And in fact, we initially had a range which was just right within the 1.23580 and the 1.23400. Remember, the 1.23400 is our key level for the week. And for those who had not watched my video on the GBP USD, which I shared during the course of the weekend, I would advise that you watch this video so that you can have the background knowledge of how we got to this point and how we actually identified that key level. So the video is right in the description box of this current video, so you can watch it, and it is duly timestamped so you can easily navigate to whichever area of focus you want to look at. So right now, so we saw the situation here at the beginning of the week where price action was ranging between the 1.23580 and that key level we had here had the 1.234 to give us an insight into the level of indecision in this market. And one thing I said here yesterday is that following the buy pressure that broke out of that resistant line at the 1.23580, that we are going to be having a buy stop order above the 1.23580 level to join that bullish momentum to the upside. And I think during the later part of what happens to be our New York session yesterday, we saw the breakout of that structure, and in fact price action moved about how many pips in our favor? About 22 pips in our favor before we were taken out. And I do hope that you moved your stop losses accordingly to secure the current position. As we saw here, price action was taken out during the early hours of today. And in fact, we now have a wider range right now, where price action right now has been ranging between the 1.23750 and that key level at the 1.234. So we started the week on a very tight range, and right now we have seen our price action has expanded into a much more wider range, ranging between the 1.23750 and the 1.23400 level. So at this point, level of patience is hereby required at this point, as we still don't know where price action is likely going to be going for this week based on the situation that we have here. So you know how we do it. Whenever we have price action ranging between two levels, we want to remain patient, wait out for a significant breakout or breakdown of the structure to give us a signal of where price action will be going. And with this kind of situation here, I would want to see a breakout retest for me to be part of any potential opportunity in this market. So there are no sell stop orders right now, there are no buy stop orders, but instead we want to wait for confirmations to happen. So if we are going to be buying above the 1.23750, then what we want to see here is a breakout of structure. Price action comes back to retest this level. Mind you, this retest of structure will be observed on a lower time frame, like our 15, 10 or 5 minutes time frame, to look out for this retest of structure, signs that buyers are gradually gaining momentum and that sellers are finding it difficult to drop below that area. Then at this point, we want to be on the verge of buying the GBP USD at this point. So that is how we are going to be buying around this area. And if we are going to be selling, then I want to see price action drop below the key level at the 1.234, and I want to see a retest of structure happen. Then I want to be joining the move to the downside. So this is what I will be looking out for on the JP USD today to join any bearish or bullish momentum at this particular point in time. And another thing I would like to call our attention to, I think I would have to readjust this bullish trend line now based on the new structure that we have. So if we bring out our line chart, I will delete this one right now and then have a new line that we are going to be using. So we already have this now mapped out. I want to thicken this a little bit so that we emphasize the importance of this trend line, as it will be guiding our trading activity going forward. So going back into our line chart right here, so you can see we have a trend line after connecting the series of higher lows, and price action has been bullish since the beginning of the week. Higher lows in this market. But one thing we saw here during the early hours of today is this breakdown of structure, and you might want to think this as a bearish move actually, but I would advise that we remain patient and let's hold on to see significant confirmation before joining any potential bearish move here. So we could consider, if price action drops below the 1.23580 and then we start seeing selling pressure below that structure, so we could actually maximize the bearish move if we start seeing selling pressure below the 1.23580, after which we can now have a sell stop order below the 1.23400 to be part of this trend continuation to the downside. So this is what I will be looking out for to capitalize on a bearish opportunity here if price action does drop below the 1.23580 at this point. And the reason why we are considering this at this point is because of the breakdown of this trend line we saw here. So that is how we are going to be trading the GBP USD for today. If you have questions, let me know right in the comment section. And one more thing I would like to share with you here is the 4 hours time frame, where it is quite obvious that price action has been bearish since the beginning of this month, and we have a trend line to emphasize the strength of the sellers in this market. And currently in the last 24 hours we can see that price action has been oscillating around that trend line, giving us a clue into how important that structure is. But if you look at the nature of things here on the 4 hours time frame, it's looking more of a bullish momentum here, that a breakout of the 1.23750 was going to be triggering a bullish momentum. And one thing that you will notice here on the 4 hours time frame is that after this impulsive move to the downside, we saw this structure, and then since then we have seen that price action has been finding higher lows. Price is yet to break down the previous low here. It's a sign that buyers are gradually gaining momentum, and it is giving us something like a double bottom structure, which from a technical standpoint is a very strong reversal pattern, where the neckline of that potential reversal pattern we have here is at the 1.23750. So from this point, I would, if you feel comfortable risking something here, you could have a buy stop order above the 1.23750, and then let's see how far that move is going to go, with a stop loss sitting somewhere around the 1.234, and that will be dovetailing to about 30 to 35 pips stop loss on this one. So anywhere above the 1.23750, based on what I can see here on the 4 hours time frame, looks promising to buy the JP USD for today. So let's see how this plays out in the next couple of hours, and trust me, I will be with you in the comment section of my Trading View and Telegram platform to give you updates as regards the current structure. So let's see how this plays out in the next 1 hour or so, and I will be giving you an update in that regard. So if you have any questions whatsoever regarding what I just explained here, or you need me to shed more light in an aspect, feel free to let me know in the comment section, and trust me, I am willing to be of help in that regard. So right now we are going to be moving on into the XAU USD, another very interesting commodity in the last 24 hours actually. And let's look at the XAU USD together and what has been going on in this market. So let's go into the 1 hour time frame, and there is something interesting here on this chart which if you have been with me on both my TradingView and Telegram platform, you will see that I shared an update, I think during the later part of yesterday, after citing this impulsive move to the upside. But when I went to check my live account, I realized that there was no movement of such. And one thing I come to understand about this whole structure was that I think around that time, the gold market was close to the public, and behind the scenes we had this impulsive bullish move that broke out of that structure. And if we were live, we would have made quite a lot of profit on that one. As you can see here, price action moved significantly from that our potential entry point, about a 230 pips move. And it was not until this morning that this bearish engulfing candle was sighted on this chart. And if you had been monitoring the XAU USD chart, you might not have this impulsive leg on your own chart. I don't know if you have it, but I saw this yesterday and I felt I was in profit. But when I checked my account, I realized that this was not happening at all on the live account. But it's okay, that has happened, and the market is is going into a state of normalcy right now, which is what we actually need to be able to project what our next line of action will be. Now, how did the week started for us on the XAU USD? What did we see here on the XAU USD that made us to think of buying this commodity during the course of yesterday's live session? So we saw the situation here at the beginning of the week where price action was initially choppy, and we had a range between the 1,947 and the 1,940 level to give us the level of indecision in this market. And you know how we do it whenever we have this kind of simple flat channel. We want to wait patiently for a signal to come up, which always comes in the form of either a breakout of the resistance line for buying opportunity or the breakdown of the support line for selling opportunities. And though we had this, but it was not reflecting on our account anyway, so we want to skip that whole situation that happened here yesterday, and let's look at what really happened during the early hours of today. So we saw price action break down that demand zone at the 1,940, and immediately we saw another wave of buy pressure resume in this market. And the way things are looking at this particular point in time, and considering what happened behind the scenes during the trading session yesterday, we might be seeing a bullish momentum from this area. Now let's scale up into the 4 hours time frame. Let's look at how the market has been playing out on a higher time frame, giving us an holistic point of view of what is really going on here. And if you remember, during our live session yesterday, we acknowledged the fact that price action has been bearish since the beginning of this month. And as a result of that, we had two trend lines which emphasize the strength of the sellers in this market. But I told you yesterday that I'm going to be using the thick trend line here, which is this red dotted thick line on your screen right now, to guide our trading activity for the week. Now, when we zoomed into the current structure, that is looking at what has been happening in this market in the last couple of weeks, we saw that the market was initially ranging between the 1,980 and the 1,960, both very strong, significant levels, giving us the level of indecision in the market at that point, before we saw the breakdown of this zone here at the 1,960 during last week's trading session. And since the breakdown of that area happened, the next thing that comes to mind is, since we have a breakdown of a key structure, we want to be looking out for selling opportunities. But there is a caveat to this current structure, which I would like to show you, and that is that 1,940 zone area. Now, one thing that is clear around this area is the fact that despite the fact that we have a breakdown of that demand zone, we saw how sellers found it difficult to continue that momentum. And as soon as price action got into that 1,940, look at the nature of these candles here. You will see how, look at the nature of the wicks of this candle. You will see sharp rejections at every point in time. Sellers try to break down that level, and this is a clear sign that buyers' pressure is gradually building up around that area, and this area could turn out to be an accumulation phase. We never can tell, but at this point in time, I'm of the opinion that buy pressure could resume around this area. Now, with the situation we have here, and judging from what happened in the last 4 hours here, you will see that as despite this bearish engulfing candle bringing price back into the 1,940, we saw how buy pressure resumed again during the early hours of today from that same area. So for me, I'm not going to ignore the potentials of the buyers from this current structure. So I want to look out for buying opportunities as well. And if it so happens that we have price breakdown retest the 1,940, then this will have negated the bullish expectation around this area. But from the look of things right now, I'm still of the opinion that buyers still has a tendency of pushing price to the upside here. So let's see how we are going to be taking advantage of a trading opportunity. And in order to do this, we want to scale down into a much more lower time frame. Now, when we scale down into the 1 hour time frame, this is what we are able to spot here. And I will still go back to status quo, and that is the range we had between the 1,947 and the 1,940. So for me to buy here, I'm going to be having a buy stop order above the 1,947 again to see how price will be reacting to that level. So I'm going to be looking out for buying opportunity above that area to join any bullish momentum from that structure. And remember, this structure here has a tendency of giving us multiple entries, as we have structures around the 1,952 to give us more opportunities to buy, and we also have structures at the 1,960, where I told you yesterday that if price action breaks above the 1,960, we shall be very, very comfortable in a buy position, as price action will now be back at a very strong demand zone, which has been a major area for buying niche most part of this month. So let's see how it's going to play out from that structure. However, if price action drops further into the downside, that is back into the 1,940, as you can see, we already had the breakdown of the 1,940 earlier. So this could still turn out to be a retest of structure after breakdown, retest, and continuous selling pressure could incite a trend continuation to the downside. So if that is going to be the case, I want to have a sell stop order below the 1,940 to capture that bearish move, if that is going to be what is going to be happening here. And in order to maximize this bearish momentum, that is, if we are going to be selling even before the breakdown of the 1,940, let's see if we are going to be having a double top, head and shoulder, or probably a reversal pattern around that area that will give us a clue that sellers are gradually gaining that momentum we need. Now, when we scale down into a much more lower time frame, like the 15 minutes time frame, now we can see how that area, we see selling pressure around that area right now. And I would want to see price action give me something like a reversal pattern, something like this, or a lower high at any point in time, where a breakdown retest of a neckline which might form at any point in time to incite another wave of bearish momentum to the downside. So these are the things I'm going to be looking at today on the XAU USD, but trust me, I will be with you in the comment section on both my TradingView and Telegram platform to give you updates as at when due. If you have any questions regarding what I just explained here, feel free to let me know in the comment section. All right, so let's see what we have here. I just had a disruption in my network. I hope we are still live. Okay. All right, so with that being said here, let's move into the last pair for today, which is the USD JPY. And so let's see what is going on the USD JPY this morning. And here we go. So on the USD JPY, we had this situation at the beginning of the week where price action was ranging between the 140.530. So let me extend this out a little bit so that we can see things clearly here. And remember, we had our key level, had the 140.750, which was supposed to be our yardstick for trading activity for this week. Now, we saw this situation at the beginning of the week where price action broke out of the key level, but as soon as price got into the 140.920, we saw selling pressure bringing price back into that support line where price action started the week, had the 140.530 area. And during our live session yesterday, we already witnessed the breakdown of the 140.530, giving us a signal, a bearish signal actually. And what I said here is that we want to see price action do a retest of the structure to give us an opportunity to sell. And since then, price action has been retesting. We had the first situation here where price moved about 36 pips in our favor. And we also have the second situation here during the early hours of today where price action also moved about 50 pips in our favor before this whole bullish momentum began. And if you are taking a sell position at that point, you must have been taken out right now, and I do hope that you moved your stop losses accordingly to secure the current positions. So right now we are within a very choppy situations right now, and remember what we said here yesterday as regards this bearish momentum that we are witnessing during the early hours of yesterday. So what we said here is that this bearish momentum we're noticing could likely be a retracement of the previous impulse leg, which we identified, and we said this is the impulse leg here, and we said price might likely retrace into a structure where the appearance of buy pressure around this area will give us the opportunity to join a trend continuation to the upside. And for us to capture that move, what we did here was to use our Fibonacci retracement tool to project the area where we could likely see the end of a retracement phase. So when we brought out our Fibonacci retracement tool, we ran it through the previous impulse leg. Okay, sorry, this is from here. So we ran it through the previous impulse leg, and what we have was a golden zone area between the 50 and the 78.6% as an area where we want to be looking out for buying pressure to join a bullish momentum to the upside. And if you look at what has been happening around this area since the early hours of today, you will see that as soon as price action got into the zone, we saw buy pressure here yesterday. During the early hours of today, we saw another buy pressure here. And in the last couple of hours also, we saw buy pressure around this area. And what this simply tells us is that buyers are gradually gaining momentum around this area. And secondly, we might likely be seeing the end of that retracement phase, and probably we can be getting ready to buy from this current structure. Now, the question right now is, how do we buy? How do we get into a buy position from this area? Now, to buy the USD JPY today, remember we have our key level at the 140.750, which we identified during the course of the weekend. The video is right in the description box of this current video you are watching. So if you do want to see how we got identified this key level at the 140.750, you might want to check out on that video by the end of the session. So we had a key level at the 140.750 level, and you know how we do it here. Our key level serves as a yardstick that helps us to position ourselves for any trading opportunity. So if price action trades above our key level, we are going to be looking out for buying opportunity, and if price action trades below our key level, we would be looking out for selling opportunity. And because price action was trading below our key level at the beginning of the week, that was what incited the bearish momentum we took advantage of yesterday. And with the way things are looking right now, as we can see, sellers are finding it very difficult to break down this area between the 140.00 area and the 140.230, which is obviously reflecting on the chart as buying pressure. It might be a sign that we are going to be having a breakout of the key level at any point in time. And if that is going to be the case, we want to be part of that move to the upside. So at this point in time, the next question we are going to be asking now is that, are we going to be having a buy stop order, or we are going to wait for confirmations to happen before we join the bullish move? Well, if we look at what has been happening here in the last 4 hours, and the last time price action came into the 140.750, it ended up in a situation where this candle here closed in the form of a shooting star candle. And a shooting star candle is a technical pattern that gives us an insight into the presence of sellers around this area. So in that regard, it shows us a sign that sellers are still around this level. So we would need a confirmation to buy the USD JPY from the structure. And that will happen in the form of a breakout of the 140.750. Please note this out. We want to see price action breakout. We are not getting too excited. We want to wait for confirmations to happen, like a retest. We want to see price action close above that structure, retest of the structure, continue buy pressure around this area, after which we want to be part of a bullish momentum to the upside. And if it so happens that it continues to the upside, we're having a buy stop order above the 140.920, welcoming more position to our existing trade. So that is how we are going to be buying the USD JPY. So we are looking out for buying opportunity at the breakout of our key level at the 140.750 area. Now, in as much as we are looking out for buying opportunity on the USD JPY, you know how we do it here. We want to ensure that we keep our options as open as possible. The market is a very, very flexible environment. It's a very fluid environment. And for us to be flexible, we want to keep the options open so that we can be part of any potential opportunity, even if price action goes against our major buyers. And now with this situation where we are looking out for buying opportunity above the 140.750, we need to also consider the potentials that sellers could also come in. And if sellers are going to come in here, how do we intend to sell? What do we want to see on this chart that will give us the idea that getting ready to sell becomes necessary? Now, the first thing here is the sharp rejection of the key level here is quite a sign that we cannot ignore here, because it's a sign that sellers are still present. And if we look at what happened at the beginning of the week, we saw how selling pressure resumed around that same area. Now, with the way things are going, price is finding lower highs. You can see price is yet to break out of the previous structure. And if this continues like this, there is a high chance that we could have a breakdown of the 140.00 level. And the importance of the 140.00 level is such that it shares a confluence with a trend line we identified on the 4 hours time frame. So for the sake of clarity here, let me show you what we saw on the 4 hours time frame yesterday, and look at what we have on the 4 hours time frame. Remember, we had this ascending channel which emphasized the level of buying pressure in this market. And from what we said on the 1 hour time frame, we said we are going to be looking out for buying opportunity at the breakout of the 140.750. Now, at this point in time, we said selling opportunities can only be checked upon if price action breaks down the 140.00 area. Now, look at that trend line I was about to show you. I said I wanted to show you a trend line on the 4 hours time frame. Look at that trend line here, and you can see how price action had consistently respected that trend line over the last couple of weeks. So if it so happens that price action breaks down the 140.00 level, price action would also have broken down that trend line, which will happen to be the first time price action will break in the trend line in the last couple of weeks. And this will give us a sign that sellers are gradually gaining momentum, and there is a chance that price action could retrace back into the support line of that ascending channel to inside another wave of bullish momentum, or it could even go as far as breaking down the structure, retest to inside a sell-off in this market. So we are going to be taking this into consideration. So below the 140.00 level seems most appropriate to start looking out for selling opportunity at this point. So we have two key levels that is guiding our trading activity for today, and the first one is our key level at the 140.750, where we said we are going to be looking out for buying opportunity, and we have the 140.00 area where we said we are going to be looking out for selling opportunities if price action ever breaks down the structure. So these are my views here on the USD JPY for today, and trust me, I will be with you in the comment section on both my TradingView and Telegram platform to give you updates as at when due. And at the end of as we end the session, I'm very confident that we are well equipped to be able to take advantage of any trading opportunity today, as we were able to simulate all the potential trading opportunities that are likely going to be happening from this current structure. And trust me, I'll be with you in the comment section as usual, and looking forward to seeing you in the comment section as we continue to monitor price action. Do have a wonderful day, everyone. Bye bye.